Hey guys, welcome back to another video. This is Lucid Trading. Today we're going to be taking a look at the stock market, the S&P 500 index. We're not going to be looking at a particular date, but today is the 14th of October. It's a Wednesday, and we're going to look at what is happening right now with the stock market, because this is actually very worrying. Now, don't panic right away. What I'm trying to say is that look at this. Look at this huge move. Doesn't that look parabolic to you? We have not seen such a move in years. I'm telling you. Actually, we've never seen such a move. This is a V-shaped recovery, right? But even after the recovery, we had a huge move to the upside. Although we did correct a little bit after hitting this price point at around 3600, 3600. But we're still going bullish again. Now the MACD is going up again. RSI is very, very high right now, and it's going until about the overbought levels. And why is this worrying? Well, the thing is, the last time that we saw similar patterns emerging was in the 2008 crash, the bubble in 2000 bursting. We saw RSI going up massively. We saw the MACD move up. Same goes here. MACD moved up, RSI went up huge, and then a crash pretty much followed. And the funny part about this is this. If we take a look when we started to go down, it was around October to November. It started at the 1st of November in 2008. Let's take a look here at the 2000 bubble. When did we really start going down? From around September to October. Right here. It's around the same area of the year where this pretty much happens. Now this is getting very interesting over here. We also see how much did we go up? We pretty much went up fourfold from this point to that point. How much did we go up from here to there? 4 to 5-fold. So we are getting in a scenario where the markets are going to be overvalued. Now I will show you something else. Guys, look at this. This is the current PE ratio of the S&P 500. This is one of the highest points we have ever been for the S&P. 35.39. The average ratio for the S&P 500 when it comes to PE ratio is around the 15. We are more than double that right now. This is concerning. As you can see, in 2000, we went up to about 30 to 33. At the highest level, when the stock markets just basically crashed, we went up to about 45. 2008, we went up massively because that was just ugly. So yeah, is this becoming the new norm? I do think we're seeing higher PE ratios, definitely, but this is not healthy. This is not looking like a healthy stock market. Prices are going through the roof. Now let's go to the Shiller PE ratio. Even the Shiller PE ratio is looking like incredibly high. 32.12. And this is a conservative estimate. Black Tuesday, right there. We are right there. Look at that. Isn't that crazy? Okay, yes, this was 90 years ago. You know, the Black Tuesday was 90 years ago. Makes sense. However, it's still super high. And we're going to go to shadow stats. The way that they used to track unemployment. which they're using other methods now. Look at this. When the lockdown began and people were getting laid off and furloughed, we had 35% unemployment. Like shadow stats, I'm talking shadow stats. And right now we're at a little bit above 25%. What they have reported is actually way less than this, way less. Because they have this way of reporting unemployment, it's kind of weird. So right now, let's say that 20 to 25% of people are actually unemployed. Well, that is really negative. There is a huge disconnect between the economy and the stock market. Eventually, after 6 months to a year, they will reach each other. The stock market is gonna react. And this is not looking good. The only thing keeping this up right now is basically the stimulus checks. Not only that, the Federal Reserve is buying a lot of assets. And once the printer stops, well, you can say goodbye to your gains. Here we go again. Housing bubble. The real US mortgage and eviction crisis explained. Well, basically, I'm not going to get into this, but if a lot of people lose their jobs, if they lose their income, if there's no stimulus checks, once they have to pay their mortgages and their rent, there's going to be mass evictions. No matter what they will do, there's going to be mass evictions. And we know that the housing market is sort of the backbone of the economy. If people don't have houses, they will pretty much go on the street. They will have no way of protecting themselves. I'm telling you, if the housing market collapses, so does the stock market. So does the bond market. Gold, silver are going to rise up. It's going to be blood on the streets. Speaking about gold, gold is rising. Look at this. We have risen so much, and I think there's a lot more to come for gold. Same goes for silver. We've risen a lot. Usually, though, precious metals they go up after a crisis. During a crisis, kind of crashes. However, I think the crash hasn't come yet. I think that the 30% correction in March was just a brief correction because of, COVID. Wasn't a financial crisis, was a health crisis, as Jerome Powell also put it that way. And then let's move to politics, guys. If Joe Biden wins, he would be good for the economy. A blue wave would likely prompt us to upgrade our forecast. The reason is that would sharply raise the probability of a fiscal stimulus package, blah, 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 blah. If Joe Biden wins the election, that would probably mean good for the economy, not for the short term, for the long term, right? So Biden wants to increase the tax rate for corporations to 28%. What does that mean? Well, less earnings. It's a very bad thing. Less earnings means, okay, we're going to cut our employees. Cutting the employees means less income. They're not going to be able to pay their rent and mortgages. It's that simple. And but obviously, I think he'll be good long term. But for the short term, for the coming 2 to 3 years, that's not good. That is not good. Here they're saying basically that the money that the corporations are going to pay are going to go to education, climate, healthcare, etc. But that is something that is going to it will matter for the long term. I'm not against Biden. It's just not good for the stock market in the short term. If Donald Trump wins, however, he will decrease corporate taxes, which is going to be bullish as hell, and he's going to deregulate some aspects of the economic systems. So that would be very bullish, but it's looking like Joe Biden is taking the lead. Now let's go back to the chart. So guys, I'm telling you, give me one moment. I'm telling you guys, this is not looking good. We're gonna have a brief bullish run. I agree. You know, short term RSI is looking pretty low. We could definitely just pack another punch. However, I think this is the last leg up. I don't know where we are going to go. We could possibly go to 3,800, $4,000, something ridiculous like that. But eventually, we are going to see a correction. Now the thing is, stonks don't only go up; they also have to come down, and it's going to come down in a very big way. I think this correction could take us well below the 2,000 level. Yeah, that's going to be very bloody. I don't know when exactly such a correction would happen. I'm going to predict that it would be in the winter, in probably the first quarter of the year, or before that. This is just a prediction. I mean, this doesn't have to be right, but overall things are looking pretty bearish. It's looking bullish near term. Long term, it's looking very bearish. Very, very bearish. So proceed with caution. Enjoy the last leg up. And if I'm wrong, then I'm wrong. You know, I'm glad I'm wrong, because I don't want to see the stock market crash. That would be just horrible. But the technicals are pointing it out to me, so I'm pointing it out to you. This might be a very, very bloody bloodbath. All right, guys. This was the analysis. It's quite late for me right now. It's about 6 a.m. I had too much Red Bull, so I think I'm going to go to sleep. If you enjoyed this analysis of the stock market, hit that like button. If you didn't, dislike it. Then also make sure you subscribe to the channel. There is a link in the description for Trading 212. Make sure you hit that. If you sign up, you get a free stock up to $100. And there's also a link for the Discord. This is our community. You can join it. It's going to be awesome there. And guys, I think I'm going to go sleep now. So I wish you a happy day. I'll be seeing you next time.